It's quite a tale of two numbers. On one hand, the consumer's paying more, in part because of food prices. Manufacturers are paying less. What does that tell you about what China's government might do regarding economic and/or monetary stimulus?
Thank you very much. And I think it's a very interesting time. It's going to be challenging for the authorities to balance the current challenges. Number one, as you pointed, current food inflation is the main reason why CPI has been rising. And in the run-up to national holidays, and the key time where lots of consumers demanding pork and actually other meat substitutes, it's a very important time to make sure that we have stabilization. This is a key word in China right now. How to maintain stable growth, stable employment, and also stable prices is also a key priority. However, as we've noticed, the key concern at the moment is the lack of aggregate demand. Whether it's from consumers, whether it's corporates and investors, there's a real sense of lack of demand, and this is really pressuring the current policies. We've already seen some stimulus, both monetary and also fiscal. We will likely see more if the data continue to turn downwards.
And do you think that it will continue to turn downwards, Jenny, or do you think the government or, just natural forces can stabilize it a bit?
Well, we've already seen the RRR rate cut, and also this time around a little bit more special. We not only had the RRR cut, we also had the liberalization of rates, so the LPR introduction. And then also on top of that, we have two more rounds of selective RRR cuts for those that are maybe the city commercial banks, also smaller banks, and also targeted towards smaller industries. So I think what we've seen so far is a very decisive move, particularly signed off by the State Council. Previously, we've seen reluctance to sign off on further stimulus. Also, on the fiscal side, what we've seen is a special increase on special infrastructure loans. We might likely see these coming to have an impact on real economy data. However, I don't think that's likely until at least perhaps the start of year next year. So I think before the end of the year, if we continue to see external pressures, no end to the US-China trade escalation tensions, perhaps we'll see more stimulus from both monetary and fiscal sides.
If we did see that stimulus, Jinny, how would it look? Would it be just lower? We saw the reserve requirements of the banks come down last week. What kind of stimulus do you think they would utilize?
At the moment, I think what we've seen is the introduction of new monetary policy, a whole package of monetary policy, because the key problem has been that even if we do cut benchmark rates or if we do lower interest rates, real rates aren't getting any lower, because we're seeing effectively the transmission mechanism towards the real economy not functioning properly. So real reform in terms of interest rate policy in China is something that takes time. But what the RRR cut has been doing is to inject a little bit of, further certainty. At the moment, there's a real lack of, confidence, I think, in the economy. So to the market itself, to boost market confidence, probably another round of RRR cut is likely. And what we'll probably also see is further measures on the fiscal side, as I mentioned, local government loans, and also probably just some signals that further support, if necessary and when necessary, will be signed off by the State Council.